Well, good afternoon, everybody. Welcome to our seminar today, webinar with the Latino Chamber of Commerce and the Continental Financial Group from Thrivent. It's a pleasure to have everybody on board today. We're having a presentation with a lot of important information for future retirement and investment. And we have a couple professionals on the area from Thrivent. And I just want to welcome you and make sure that if you have questions that you can do it at any time using the chat button at the bottom side of your screen. Just type in your question, and somebody in the team here is gonna allow you to or to present that to Cesar, who is going to be the presenter, to answer any of those questions. Or if you want to wait to the end of the presentation, that would be okay too. This presentation is going to be in English, but feel free if you have any questions in Spanish. Most of the people here, I would say all of the people or the team here, are completely bilingual, so they can address any questions in Spanish too. With that, I want to introduce you to Kingsley Calvo Jordan, who is part of the Continental Financial Group. So Kingsley, welcome. Thank you for participating with us. The stage is all yours.
Thank you, Fabio. Hello, everybody. Welcome to all the Latino Chamber members. It's great to be with you again for the second in our series of 3 different webinars and workshops. Will be with you. I'm here with my teammates Cesar Romero and Asni Ferreria Filio. We are, as Fabio said, Continental Financial Group. We focus on working with small business owners and with the Latino community. So we're here to support you in any way, and please feel free to reach out to any questions. The information today we hope you'll find helpful, and we'll tie it all into impact small business owners. With that, I'll pass it over to Cesar Romero.
Gracias, Kingsley. Buenos días, buenas tardes a todos. Por favor, déjenme saber si pueden ver mi pantalla que voy a compartir para empezar la presentación, ¿ok? Si alguien me levanta la mano, dame un thumbs up, or give me a thumbs up. Let me know if you can see that. All right, perfect. Thank you. So again, as we've told, we are the Continental Financial Group, along with the Latino Chamber of Commerce. We thank you for the opportunity to give you guys a little bit of insight about the way we think about money and the recommendations that we have in regards to retirement. Okay. So first of all, again, this is who we are. Osni Ferreira Filo, Kingsley, and myself. I'll put this back up at the very end as well for you guys to be able to write down our phone numbers and emails. But this is just a brief introduction of who we are. Today, we're going to be talking about financial foundations, investing for retirement. One of the things we talk a lot about, and a lot of people are talking about, is what is the best way to save for retirement? How much do I need at retirement, and which way should I be saving for retirement? So we're going to touch on about 4 recommendations that we have for everybody. As we go through it, again, like they said, please feel free to jump in. Also, Kingsley will oftentimes, as we go through the slides, Kingsley will jump in and give us his perspective as a small business owner, and give you some recommendations for that as well. So first, as we get started, I just want you to take a moment, and we'll just do a little bit of a little exercise here, but just take a moment, and as you see yourself in retirement, living retired life, what does that look like? What are the things that you are doing? Are you taking more vacations, or are you donating your time? Perhaps you are traveling and you are doing the things that you always wanted to do, right? So I want you to have that thought in mind as we talk through all of this, because all of the things that we are going to touch on are going to be The tools and the tips that we see that will allow you to be able to do all of those things, or help you be able to do as many of those things in retirement as you can. So again, the 4 things that we're going to talk about are going to be smart moves, future taxes, Social Security, and how that plays a role in the retirement, and the different resources that we can offer for everyone to see. Okay, so on this slide, that's supposed to be a penny. I know it's not a very great penny, but what I want you to think about here is, if you were walking down the street and you saw a penny on the floor, would it be worth your time? Would you think to pick it up? If not, how much would there need to be for you to be willing to pick it up? So if you're walking down the streets and you saw a quarter, would that entice you to, pick it up and sanitize it and do all the things that you have to do? Or would it have to be $1 or $5? And the reason I want you to think about this is it's going to go back to employer matches and what we recommend with those. Okay, so as I said, the number one kind of tip that we have is to aim to meet your employer match. Now, not everyone is going to work at an employer that actually has a match, but if you have an employer that does match your contributions into your retirement accounts, it is very important that you maximize that match, because if you don't, you are leaving money on the table. As an example, if your employer says that they'll match 3% of what you put in of your salary, and just for the sake of round numbers, you have $100 as your paycheck. If your employer is saying that if you put $3 into your retirement account, they will also put $3 into your retirement account. So each paycheck that you have, instead of just putting $3, you're going to have $6 put into this account. Now, if you were to only put $1 or $2 and your employer is just matching you, so just putting $1 or $2, you can see how you're leaving money on the table. And that's why it's important to be able to aim to meet your employer match. We understand different situations and reasons may not allow you to do that, but that is, our kind of number one tip. Now, maybe Kingsley, you want to jump in here, because there are, as a self-employed individual, ways that you can also save into your account, into your own accounts.
Thank you, Cesar. So as from the business owner perspective, establishing a retirement plan is key for one of two things. It's going to attract talent to your organization. You're also going to be able to retain talented individuals, what everybody wants, especially in this day and age. So those are key things with establishing your retirement plan. From there are ways, there are different types of plans. Traditional 401k plan, there's a SEP IRA, and then there's also profit sharing. So we can go into more depth with you on that, but the key takeaway from that is the retaining and attracting talented people.
Thank you for sharing that. The next slide, and this is just kind of for reference, but if any of you know how to work this formula, it's a really interesting formula. It's a compound interest formula. If you've heard of Albert Einstein, he considered the compound interest one of the most powerful tools on this world. What that is, the easiest way to think about a compound interest formula is that earlier that you can start putting money into it, the more time it has to compound, so to build upon itself and allow it to grow. So there are two things that play a big role in the compound interest, is the time in years and then the rate. Those are going to be the two things that play a big role in the compound interest calculator formula. And what that goes back to is making your money work for you, right? You may have heard people that talk about making your money work for you, or people may maybe say, let's put your hard-earned money to work. what they are referring to is using that compound formula to allow your money to build upon itself. Again, for the sake of simple numbers, you have $100 and you invested, and then in 1 year, assuming you get 10% of return, it now becomes $110. Well, now that same $110 gets invested again, and you get another 10%. Now it's $121, and you see how it starts to build upon itself. You're not doing anything special. You're not spending time doing anything, doing any research or actually working at it. Your money is just working to help build you a nice nest egg. Okay. With that being said, on the nest egg, you want to be able to keep that visible. So one of the things that we like to tell our clients is that you don't want to keep it visible because you want to constantly be checking it on a daily basis, but you do want to keep it visible enough to that that the money is going into your account properly, that it's getting invested, and that you can see it growing, right? There are going to be times throughout the year, throughout the seasons that perhaps the market is going to be up or down and whatnot, but that's not necessarily a call to action. Again, we just want to make sure that you are looking at it and that you are aware that it's happening. Usually with that, for most people, they get encouraged as they see it build and they continue to grow upon it. Do you want to add something to that, Kingsley?
I was just thinking, Cesar, with what you're laying out, this is really good info. For an individual who is a business owner and they may have few employees, could be their partner, their spouse, and maybe the kids come in on the weekends. A great example would be a SEP IRA, because it doesn't cost you a lot to set it up. Maintenance annually isn't expensive. It's a few documents to do it. On top of that, you can max out your contributions into the plan. So another way of saying that is that now you have two options for retirement. You have an option to retire what you do individually, and then also what you create for yourself through your small business, through your LLC. And if it's your spouse and your kids, they can get the matching percentage you set up for contributions into the plan. So you take that and you look at the compounded interest that Cesar was talking about. And if you start this early in, or the first, second year in when you're cash flowing as a business owner, it becomes a very powerful tool for you. Thanks, Cesar.
Good. Perfect. Thank you for sharing that. Yeah, it makes sense. Again, we're taking this perspective from two different ways. So you can be an employee of a company, you can have your own business. One of the things that's important for us to mention is that everybody's different. Your goals are going to be different than others. And so these are general concepts of what we recommend. The best thing that you can do is talk to a professional to see what is the best course of action in your individual case. Okay. With that, there's going to be streamlined costs and fees. Perfect segue into that. You heard Kingsley say that with the IRA that you would be able, that the costs are low, cost fees. Now with all financial products, there's going to be costs associated for the ability to put money into the market and invest in a way that's according to your excuse me, goals and desires. So it is important to read the cost fees. It's going to always be in the fine print, or work with somebody who knows and can helps you navigate those costs and fees. In the costs and fees, and then there's going to be investment options, right? Once you select, you say, hey, the best thing for my small business is a profit sharing, or it's a SEP IRA, whatever that may be. Now, once you put the money into there, you have to decide where you want to invest it in. Now, one of the things that is going to be important is determining for how how long is it gonna be before you need the money? So for example, if you're investing for something that you're going to need in 3 to 5 years, you're going to want to invest it a little bit differently than if you're investing for retirement that may be 20 to 30 years out. So depending on the time horizon, how much risk you're willing to take, different investment options are going to be better suited for you, your team, or whoever you are investing through. Now, if you work for an employer that offers a 401k, they'll usually have a bucket of investment options. It can be anywhere from 3 to 20 different options, and picking the right one is important. And going, just kind of speaking on that 401k, this is kind of a case example, and I'll kind of let you think through it for a while. But if you were Johanna, so Johanna left her employer where they offer her a 401k. She was able to contribute it over the years, and now that she left, she has to make a decision on what to do with it. The 3 options that Johanna has is going to be skip the paperwork and leave the 401k where it is, so at the last employer. Now, depending on the employer and how much money you have there, they may or may not request that you do take it and move it, but some allow you to keep it there. The next one is wait and see. So do nothing at the moment. And the third option is roll it over. When it's saying roll it over, is roll it over to a new employer or roll it over to a financial professional that can invest it again according to what you want it to do. So those are the kind of 3 options that you really have when it comes to a 401k. And the reason that we do recommend that you talk to a professional again if you leave an employer and you have an old 401k is because depending on what you do with it, you may or may not have to pay taxes on it. So it is important to understand that there's tax consequences into a 401k. The reason is depending again on how you saved. If you put money in there pre-tax, it means that you haven't yet paid taxes on it. What that means is that when you go to take that money out, you will have to pay the taxes on it that you didn't pay when you first put the money away. Additionally, if you are under the age of 59 and a half, you will also pay a penalty. So with the 401k tax code is written is that you do not have access to it until you're 59 and a half. And if you do need for some reason to access it before that, there is a penalty. Now, there are a few exceptions to that penalty, but for the most scenarios, there is going to be a penalty. Was there something you needed to add to that, Kingsley? I wasn't sure.
Well, let me know when you're done, and when you're done with with what you're presenting, then I'll just throw in the business side piece.
Okay. And so this is very important again. And as you save and plan for retirement, all of these numbers, these rates are going to be very important because they're going to help us determine the best way that one can save for retirement. Go ahead, Kings.
Thanks, Cesar. So this is very important for the individual, right? And it's a lot for the individual. All of a sudden you get 25 pages, welcome to your 401k plan. This is the list of mutual funds that you can invest in. What do I do? How do I set up a beneficiary? What happens with the money when I need it, if I need it? So we take a step back, and what the team does with the business owner is we explain each retirement plan based on the size of your company. Then we work with you and either the third-party administrator or the custodian of the retirement plan to develop the features that the plan has. So within that, you can create a retirement plan, a 401k plan or a Roth 401k plan, that would be, as Cesar mentioned, you're paying the taxes on a deferred, which is the 401k, or the participant is paying in the Roth, is contributing into the Roth 401k, which is the taxes they paid up front. The other thing that's good about that working with a team like ours is that we're able to meet with each individual participant on a case-by-case basis, do recommendations based on how old they are, when they plan to retire, taking into consideration what other type of retirement vehicles they have in their portfolio. So it takes the burden off of the business owner. And then we do an annual review with the participants so that we can make sure that they're getting the most. So it's a great add value for the business owner. And I think Cesar mentioned this, but I'll just double check. The contributions that the employer makes into the 401k are still considered tax deductible for the employer. So that's big, because everything you put in, you don't claim on your taxes. Thank you, Cesar.
Yeah, perfect. Thank you for adding that to the piece. I had not mentioned that. So that is a really important part. So that is, as an employer, a tax deductible thing that you get to do. Now, we've been talking a lot about kind of retirement plans and whatnot. Most of them are going to be an individual retirement account of some sort, right? So you may have heard the term IRA, or the letters IRA. That's an individual retirement account. There's a variety of individual retirement accounts, and the reason this picture is up here is because this illustrates kind of what an IRA can be. So they think about it as a candy bar. So the candy bar itself, it's your capital, right? It's the money that you put into it and the shares that your money is buying. Okay. The wrapper is the type of IRA. As we've been talking over the last 30 minutes or so, we've been talking about different types of IRA. So think of the wrapper as the type of IRA. So there's chocolate, right? So there's in an IRA, that there's money and shares and they're invested differently. But the wrapper, the way that you wrap the money around is going to matter, not only when you put the money in there, when you put the chocolate inside of the wrapper, but when you go to take it out. Okay, so each one of those 9 different retirement accounts has different tax treatment. So it's important to know which one is the best for each situation. And with that, here are some examples, right? So we talk a lot about tax buckets here. And it's just the easiest way that we found to explain this. But we'll start with the tax now bucket. What a tax now bucket is when the government is going to tax you on any money that you made this year. So for example, if you have money in a checking account, a savings account, if you have mutual funds through a bank, perhaps you decided to buy some stocks yourselves through Fidelity or Robinhood, or you started purchasing maybe cryptocurrencies, something like that. Usually when you buy and sell any of those or the above, you're going to pay taxes that same year that you sold, the particular either stock, the cryptocurrency, or if you just had a lot of money in savings and they sent you a 1099-R, you just pay taxes that same year, right? This is just what you do every year when you file your taxes. The second one is tax later. As we explained, 401ks, 403bs, individual retirement accounts, all of them fit in here. But with tax later means that you put money in here before you pay the taxes, right? So what that means is that before you actually pay taxes on your income. So again, for the sake of easy numbers, if you have a paycheck that's $100 and you said, I want to put 5% of that away, $5 would go into this bucket without ever having been taxed. So then you would only have to pay taxes on $95. You would no longer have to pay taxes on 100. You would just pay it on 95. However, because those $5 that came in here weren't taxed later, because they weren't taxed, they will be taxed later, as this says. When you ideally get to 59 and a half, 60 year of retirement, and you go to take money out of here, that's when you will pay taxes on it, right? So that there's a few benefits to that. And let me just annotate this here. So there's a few benefits. Again, you're putting the money in here and you're not paying any taxes, but when you take it out, you pay it. So one of the nice benefits is that this money, if you do it this way, is going to be growing tax-free. It's going to be growing tax-free. So all of this bucket's going to be growing, and you'll have never paid taxes until you go to take it out. Okay, so you see how that can be beneficial. And also it reduces your taxable income, right? So as I said, and as if we go back to the tax brackets, say you made $80,000, but out of that 80, you saved 7,000 of that into a pre-tax account, right? And just there's a multiple different types, so if you put $7,000 in here, so that means that when you go to pay your taxes and file your taxes, you are only going to be paying it on $73,000. All right, so that's simple for the sake of easy numbers there. So let me clear my drawings and go to the next page if I can. And then the next one is going to be a tax never, right? Really tax never again. So the way this works is that you are going to put money in here after you've already paid taxes on it, right? So you're paying taxes on this today. So you get a paycheck. So let's go back to that example of $100. You get a paycheck and you say, no, I don't want to save anything. I want the whole paycheck. So you get the paycheck for $100. So that means you're going to pay taxes. You'll have paid taxes up front before it goes in. You pay the taxes here. So out of that 100, whatever it was, you say, I still want to save $5, but I want to pay the taxes up front here, but I still want to save $5. Now that $5 is going to grow in a matter where it's going to continue to grow. And the benefit of that is that when you go to take this out, you will no longer have to pay taxes on it because you paid them here. So any and all growth that happens here over the years becomes then tax-free when you take it out. Would there be anything you wanted to add to those three buckets, Kingsley?
Well, I think those make a lot of sense, Cesar. I think what I'd say is, if from a business owner standpoint, offering these plans are key for you. At the same time, you're going to feel really good about having something you can help tie the people so your extended family, right, who you have as your employees. Another way I can present this is that what you're looking here is a diversification of your portfolio from a tax efficient standpoint. So as a business owner, you always want to be thinking a couple steps ahead, and you want to look at what am I doing with my cash flow as a business owner? Where am I setting myself up for success? Where am I drawing money from which accounts, and are there tax implications if I have to make a big purchase for my business? If I want to buy another business, where am I taking that money out of? And where am I putting that money until I need it? So diversifying not only your investments, either through acquiring properties, selling businesses, creating retirement plans for yourself, the diversification of your portfolio and diversification of the funds and where they sit are always important for a business owner.
Thank you, Brian. The next thing that I want to talk about, and Kingsley just perfectly set me up for this as well, is kind of the diversification, right? So inside of these portfolio, or inside of an IRA, or what we call a portfolio, there's going to be different pieces of that pie, different tools in the toolbox. you can call it, but there's going to be stocks, bonds, passive income. Stocks are going to be the more riskier investment that, however, allows for the most growth possible. There's going to be bonds. Bonds is debt. So when a company like Apple, for example, decides that they want to build a new building, or let's just take Walmart for an easier example. But if you think of the Walmart, they decide that they want to build a new Walmart in a city near you. What they can do, they can either pay for it cash if they had the money available. They could sell more stocks if they were able to do that. Or they could issue bonds. What bonds is debt. So essentially, they are selling their debt in the market, and you as a consumer are allowed to buy it because bonds are safer. They provide a lower return, but a lot less risky. And then you can also purchase some passive income, right? As you're creating kind of a plan, you can create also buy as well passive income tools. So that would work similar to like Social Security or annuity, where you know you're going to get a guaranteed payment each month inside of there. Okay. And then the last piece, and some of the resources that we want to mention to you about. So if you would like to know a little bit more information kind of about how we look at tax efficiency, right? This is what we call a tax efficiency checklist. This is something that we can send to you, and it'll help you see where you are currently saving. If you have all your money here, or maybe you have it all here and not very much here. So this will allow you to see where you are right now to make sure that you are able to diversify, right? So one of the things that we always talk about is diversifying the different, where you have your money distributed. It's not that one strategy is better than the other, but it's always just better to have money in different places for different periods of time, so that you know that you are protected against any type of environment. Okay, so again, if you're interested in that, that's something that we can send over, and we'd love to walk with you through it. Another thing that we do is customized strategy, right? So over this last few minutes, we've been talking a lot about general terms, what an IRA is, what different retirement accounts are, what we recommend that you do as part of your retirement strategy. Now, this is all very generic, this is what everybody should be thinking about. However, we offer free of charge customized strategy sessions. And that session is where somebody is able to sit down with you and go over your individual plan and what your individual needs are. And then, Kingsley, do you want to add anything to kind of the customized strategy session there?
Yeah, thanks, Cesar. So from a small business or the business owner standpoint, particularly with a startup, it's important, or for the entrepreneurs, it's important to have specific corporate structure in place. What we mean by that is things that will protect you and your business from if someone becomes disabled, if you're in a situation where you have a partner, something happens to your partner, that the business is covered, or the family of the decedent is covered. Also, that if your company is growing, that you have access to creating an estate and a trust, because those are all key things. So we look at the risk mitigation, reducing risks and loss when they happen. We look at creating your retirement plans with you based on the size and size of your company. Then we look at the investments, where to put them, as I mentioned before, for upcoming big purchases, large purchases, or acquiring other pieces of property, where you're taking that money from. And then lastly, as I just mentioned, working with the legal team, part of our network for estate planning exit strategies, and trusts. So we can help with all of those areas. Thanks, Cesar.
So those are all the areas that we said we can help you on. So that's again, this is we hope this was a little bit helpful, that you understood some of the concepts, some of the things that we offer, why we said the things that we do. I'm gonna go back to one of the first slides so that you can jot down our information and whatnot, but I also want to open it up to any questions or anything additional that you, Kingsley, maybe even Osni, would like to add for the members to see. But I'm gonna leave it open for right now.
I'm good, Cesar. I think we covered. I think the main thing is we can help on the personal and the business owner side in multiple ways. Feel free to reach out to us. Any question at all, big or small, and be happy to sit and get to know you and help out wherever we can.
Cool. Works for me. All right. Thank you, Fabio. We'll send it back over to you, and any last thoughts you want to.
All right.
I do have a question.
Oh.
Yes.
Is that okay?
Yes.
Of course.
Okay.
Please.
Hi, hey, Daniel here. So, I've been wanting to use a self-directed IRA accounts. Would I be able to do something like that? And what would be the process for that?
The IRA that we can create for you quite easily. It's a really good idea, and Danielle, especially the younger you are, the more benefit you'll get from it. In just answering your question specifically for the IRA, the paperwork's easy. There's no cost. You can put $6,000 a year. You have up to tax filing date to put in previous year and current year, so you can do 12,000. It's very good. We also want you to understand the tax ramifications there, and so you can't touch this money till 59 and a half. After that, then you're freed up to touch the money. So another a piece that goes with this that would be a nice addition and diversification portfolio would be to have a Roth as well. So then you have both.
Okay, yeah, thank you.
Yeah.
All right. Thank you, Kingsley. Thank you, Asmi. Thank you, Cesar, for the presentation today. Really, really important information, and I know there is a lot of financial vocabulary, all these Roths, IRAs, and all these. For some people are a little bit confusing, but thank you for clarifying all the definitions of all those words. Even myself, I get a little more, better understanding on what are some of those words are. And I think this is a good seminar for our Latino base here, our business owners and Latino community in general, so everybody can have a better understanding on what the tools are for not only the traditional regular American population, but they're also available for minorities, Latinos, Asians, and African American. All of minorities communities have access to all these tools. The only thing is on the Latino side of things, usually in our countries in Latin America, these tools are not very readily available. But now we are here in Minnesota. It's time for every one of us to jump in this train and take advantage of these tools. Make sure that we have our future secured, the future of our company, or the future of our employees, and the future of our own family using these tools. So I'm very glad that you guys were able to join Cesar, Kingsley, Asmi, and the people in the audience too. I will be posting the recording of this presentation in our website within the next few days. So people that were not able to participate today, they would be able to just go back in there and learn all these concepts. So thank you again. Please keep looking at our calendar, because there are a couple other presentations and webinars that the Continental Financial Group is going to help us with. There's plenty concepts here to learn, and we are trying as the Latino Chamber of Commerce to be a interface of the community, the Latino community and business community, and the people that are the professionals that have the information available, like Thriven, Cesar, Kingsley, Osni, and they are willing to provide us with that information. So keep an eye on our calendar, 2 more to come, and hopefully we all can take advantage of all this information. For now, we'll say good afternoon, buenas tardes, y nos vemos hasta la próxima ocasión.
Hasta la próxima.
Chao, chao. Gracias.
Fabio. Gracias, Fabio. Hasta luego.